Warren Buffett. Often hailed as the Oracle of Omaha, Buffett's investment prowess is unmatched. At the helm of Berkshire Hathaway since 1965, his unique approach has seen the company's stock soar, outpacing the S&P 500 with impressive gains.
The important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a company. There's thousands of opportunities there. I did understand the Bank of America.
Buffett's secret: a deep understanding of value investing, a keen eye for businesses with competitive advantages, and a masterful use of dividends for long-term compounding. Hey there, savvy investors! Welcome back to Dividend and Conquer, your go-to channel for mastering the art of smart investing. Are you ready to dive into the world of dividends and discover the secrets of investment giants? Today, we're delving deep into the realm of dividend investing, taking cues from none other than the legendary Warren Buffett. Grab your notepads, because we're about to unravel some golden strategies that could redefine your investment game. Warren Buffett is a figure synonymous with unprecedented investment success. His journey, marked by an impressive compounded annual gain, has turned ordinary investments into extraordinary fortunes. How did he achieve this? It's all about understanding value investing and looking at stocks as more than mere numbers. They're pieces of businesses. Imagine Buffett at a yard sale, eyeing each stock like a rare treasure hidden among knickknacks. He doesn't just see stocks, he sees stories, potential, and maybe a bit of magic. It's like he's got a financial crystal ball, or maybe just really good glasses. Buffett's approach could make even a lemonade stand seem like the next big Wall Street bet. So, while we can't all have Buffett's magic touch or his glasses, we can certainly try to see the business world through his unique and possibly bifocal perspective. Buffett's forte lies in his ability to spot companies with long-standing competitive edges, ones that promise consistent cash flows. It's like he has a sixth sense for sniffing out business success, or maybe he just has a really good business nose. By reinvesting dividends from these robust businesses, he's crafted a compounding empire. Think of him as a chef, but instead of spices, he's mixing dividends to cook up a financial feast. And despite Berkshire Hathaway not paying out dividends, it thrives on receiving them, amassing billions in dividend income annually. It's like throwing a party where everyone brings gifts, but you don't have to give any in return. A true investor's dream scenario. In this world of stocks and investments, Buffett is like a maestro conducting an orchestra, each instrument playing its part in creating a harmonious financial symphony. His strategy isn't just about picking winners, it's about orchestrating a diverse portfolio that sings in unison. Watching Buffett in action is like witnessing a grandmaster chess player, always thinking several moves ahead, turning the chessboard of the stock market into a playground of strategic triumphs. With every move, he teaches us the value of patience, foresight, and the art of the long game. Now let's break this down. Consider the impact of dividends in your investment portfolio. Dividends act as persistent assets, steadily enhancing your wealth. Buffett's genius lies in leveraging the power of dividends. He carefully cultivates these dividends, much like a gardener nurtures a prized rosebush to ensure they flourish. This approach isn't just about initial investment, it's about consistent nurturing and growth. Buffett's dividend strategy is founded on assessing a company's financial health and sustainable cash flow. He prioritizes investments in companies that reliably deliver returns, reflecting his deep respect for firms that exhibit fiscal prudence and strategic vision. This is not merely about short-term gains, it's a long-term commitment to stability and growth in a dynamic economic environment. Buffett's focus on dividends underscores the significance of investing in businesses that are resilient and capable of consistent performance, ensuring a stable and growing investment portfolio. Buffett's dividend strategy extends beyond mere selection. It involves a tactical reinvestment of dividends back into the portfolio. This reinvestment strategy accelerates growth and compounds returns over time. By consistently reinvesting dividends, Buffett harnesses the power of compound interest, transforming modest yields into significant assets. This disciplined approach to dividends is strategic, focusing on long-term wealth accumulation rather than immediate payouts. It's a methodical strategy that emphasizes continuous investment and growth. illustrating Buffett's deep understanding of how to effectively utilize dividends as a critical tool for sustainable wealth creation in the complex tapestry of the investment world. Enjoying the insights so far? If you're finding value in our deep dive into Buffett's investment strategies, don't forget to hit that subscribe button. Join our Dividend and Conquer community for more empowering investment content. Let's explore Buffett's transition from cigar butt investing to focusing on business quality. This dramatic pivot, akin to swapping a beat-up old clunker for a sleek sports car, was significantly influenced by his partner Charlie Munger. It was Munger who helped Buffett see the light, or perhaps the quality in this case. This shift led to hallmark investments like See's Candies, embodying Buffett's evolved philosophy. It's not just about snagging a business at bargain basement prices, but more about its enduring value and robust earnings potential. In his early days, Buffett hunted for companies priced less than their worth, a strategy akin to finding half-smoked discarded cigars that still had a puff or two left. Sure, these investments were cheap, but they weren't exactly the crown jewels of the business world. Munger, with his sharp insight, nudged Buffett towards appreciating the beauty of businesses with solid foundations and long-term growth prospects. The focus shifted to companies that weren't just surviving but thriving, with strong market positions, loyal customer bases, and consistent cash flows. This was about investing in the future, not just capitalizing on the fleeting present. It was like choosing a fine wine that would age gracefully, rather than a cheap one that might turn to vinegar. This approach, investing in quality rather than just price, has been a game changer, proving that sometimes the best value is found not in the discount bin, but in the assets that promise sustained performance and reliability. Investing in dividend-paying stocks aligns perfectly with Buffett's approach. These stocks often represent mature, profitable companies, exactly the kind Buffett targets. For example, his significant dividends from companies like Chevron and Bank of America exemplify this strategy. These investments are not just about short-term gains, they are a testament to his belief in the enduring strength of well-established companies. Buffett's strategy here is clear. Invest in businesses that have stood the test of time and have a consistent record of rewarding their shareholders. But what's the real takeaway here? It's about recognizing the enduring value of businesses that consistently pay dividends. These are the hidden gems in the investment world, steadily building wealth over time. This strategy is akin to planting a forest rather than a single tree. It's about cultivating a diverse ecosystem of robust, income-generating assets that can withstand economic cycles. Dividend-paying stocks are often less volatile, providing a steady income stream and a cushion against market fluctuations. They reflect a company's financial stability and commitment to sharing profits with investors, which is particularly reassuring in uncertain economic times. Moreover, reinvesting these dividends can lead to exponential growth in your portfolio. This approach, known as compounding, is the cornerstone of Buffett's investment philosophy. It allows investors to purchase more shares, thereby increasing their potential dividend income, which in turn can be reinvested. This cycle creates a powerful growth engine, turning modest initial investments into significant holdings over time. Buffett's focus on dividend-paying stocks is not just a strategy, it's a philosophy, one that prioritizes long-term wealth creation over short-term speculation. It's a lesson in patience, discipline, and the power of compounding, emphasizing that true investment success comes not from chasing market trends, but from building a solid foundation of reliable, income-generating assets. Before we wrap up, a question for you all. Are you a fan of dividend investing like the renowned Billionaire we feature? Share your thoughts and experiences with dividend investing in the comments below. Let's spark a rich conversation. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions. That's a wrap on today's exploration of dividend investing, inspired by Warren Buffett's strategies. If you've enjoyed this journey, smash that like button and subscribe to Dividend and Conquer for more insightful content. Stay smart, stay invested, and let's conquer the world of dividends together. Until next time.